So what is up guys, and welcome to another trade recap on the channel. So in this trade recap I am not the happiest. We are not either in a win or a loss. So today we had a break-even day, but we could have been up so much. So I'm gonna show you later what we could have caught, but the situation for right now, you can see we are at 0. I'm gonna refresh it, but yesterday we had a win and today it is just a 0. So let me show you what the trade was. It actually looks like a loss, and this was quite a different trade from my side because I don't usually take 5 risk to reward trades, and that's why it was break even. I managed it completely different. So if you just stick in the video, I'm gonna explain to you exactly my thought process when I entered the trade and how did it end up being break even. So let's just first of all go to the beginning of the session. So right here is the 9:30. So the thing I'm gonna do is I'm gonna scale out to the 4-hour time frame. So this candle wasn't here on the open. So let's start with the 4-hour time frame. That's like the time frame I check out daily time frame, but usually there is nothing to see there. So on the 4-hour time frame, what I see right here is basically that we have this fair value gap that we just inversed. And what does that mean? That means that we closed above that fair value gap right here, and that means that I want to see market make a move towards the next liquidity, and the next liquidity right here is this high right here. Why? Because it is pretty nice high that is also inside another fair value gap, so that makes it like extra more powerful liquidity. You can say it like that, because you know a lot of people sold from here, so there is a lot of stop losses over it. So basically that is going to be our draw on liquidity. Then we go to, let's say, 15-minute time frame, and what we can see on the 15-minute time frame is if we turn on the, let's say, this ICT kill zones, which is basically market sessions, you can see that we have a London low down here and a Asia low down here. So what do I want to do? I want to see them swept. So basically, wait, here is the market open. So right now you have a clearer picture of what I saw. We already have these high swept, which means if I want to enter into some kind of longs, I need to see some kind of sweeps. So let's just turn off the indicator. We have them marked out, and let's see what happened after the market opened. So here the market opened, you can see a insane pump to the upside. We did not take the liquidity that I wanted to see get swept, so I'm still bullish. If we took this liquidity to the upside, I would have been bearish, but since we didn't, I still wanted to see some longs. And as you can see right now, we went to the downside. Here, why didn't I want to take this opportunity to the upside? Because we didn't sweep no liquidity in the market, and I just didn't want to take this with all the extra liquidity below. So basically what happened, we just swept this high, which would even be a break-even point, and this trade would probably be a break-even or invalid trade. So it's not important. I didn't like this trade because no liquidity was swept to the downside. Then the trade I actually took that I'm not that proud of, we swept this liquidity, so we made a manipulation leg and we kind of like swept liquidity. We didn't really sweep that much liquidity, it was just a manipulation leg, but a way better choice of playing out than this trade before right here. So I liked it way more than previous one, and I thought we are just gonna pump out, like out of my experience, but that turned out not to be true. And look at the candle close of the next candle. It was pretty bad candle closure, and I just said I'm gonna enter this trade very lightly. Why lightly? Because if we target the 5 risk to reward, me entering a like third of the risk I normally enter, I wouldn't be that sad if it lost. Like, I wouldn't care. And how did I manage to manage this trade? Since we have a look at a huge wick to the upside right here, since we had that wick right there, I placed my break even once we swept this wick. And how does that work? So I entered the market right here, and this is my break even point right here. So once we cross that break-even point, which is literally 1 risk to reward, so it's a fairly good break-even point, but it is just like such a small point difference. So you can see that we swept and I got stopped out right here. And if I didn't do that, so market gave, if somebody of you guys took this trade, market gave you two chances to exit break even. So this was the first chance, this first pump to the upside and a retrace, and then the second chance, if you wanted to place your break even after this got swept, here was the chance. So we went to the upside, we swept, we came to about 1.5 risk reward, which is more than enough to put break even on, and then after that we went to the stop loss. So if anybody lost money here, like, it was just not that smart managing of a trade. So the next thing and the next trade was really a plus trade. So look at this one. So if we fast forward the market a little bit, you can see we came down, we swept all the liquidity, we did manipulation leg, just wait for it, here is the manipulation leg, and just beautiful trade overall. So look at this manipulation leg of this slowdown here. I'm gonna actually draw this one. We're gonna remove these so it doesn't confuse you. So we swept Asia and London low, and what do? We want to enter to the upside. What did I do? I did not even notice this trade because I don't know, guys, I'm just a little bit dumb, and yeah, I don't have any excuses. I just missed it because I don't know, and I missed money basically. So on the 2-minute time frame, you could have entered this trade on the 1 or 2 minute. It's not that important, but you can see on the 2 minute we can look at it. Here's the fair value gap, and here's the first candle, and here's the second candle. So if you entered the trade right here, you can put like your stop loss right here or here below the fair value gap. It is not important because like everything is correct, it's all up to you. So if you put your stop loss there and you, let's say, even if you target this, it's a great trade because it's high probability, but you could target that high, you could target this high, that high up there, whatever you want, because we swept all the liquidity and there is no reason for us to go anymore to the downside. So let's just see how did it play out, because I know it played out good because I missed it. You can see it pumping instantly to the upside, and yeah, it just ended up pumping even more. And this is right now the time right now. So if you would exit this trade right now, that would be 3 risk to reward. So yeah, I could have profited a lot of this trade, but what can you say? Like, I just missed it. It is what it is. I'm gonna journal it. I'm gonna remember this mistake because I could have made a decent thousands of dollars off of this trade. So I'm just gonna remember it. I'm gonna probably have a nightmare of it tonight. So yeah, I hope you guys took it if you traded today's session. And yeah, basically that's why I'm sad today, and I hope I'm not gonna repeat this mistake. So I'm gonna see you guys in the next trade recap. Bye guys.